Everyone, welcome back to Questions with Matt and Mark. I'm going to start by asking Matt my question of the day for you. So, throughout this pandemic and as COVID cases continue to fall, Matt, what did you learn the most in regards to the stock market and investing through a pandemic like this?
Good question. So I'd say over the past year, the biggest thing that's been reflected upon me in the market has been the technology sector. In the past, in previous market corrections, the three areas that would hold up the best in that type of an environment would be things like consumer staples, utilities, and healthcare. And really, that script has been changed, Mark, because of COVID. And what you really saw over the past year is people realized that the economy is so much more reliant upon technology that behind the scenes, the perception was that their earnings were going to hold up the best, and even in some instances, do better than they normally would have. So I would say, Mark, that's my biggest observation so far since COVID has started, is the importance looking forward of just technology in general.
Yeah, and I'll add to that too, just a general comment that, when we go through things like this again in the future, things are going to be okay, right? It's going to be tough for a few months, but things will recover, jobs will come back, the markets will turn higher. And I think it's just important to note that, through tough times come some of the best times in our country, and that just realizing that things will turn out to be okay.
I would agree with that, Mark. I think a lot of times investors kind of start looking through the lens of opportunity, not fear. And it's not to say that short term, that volatility is not fun. I get that. And if you go back to some of our independent advisor podcasts back in February and March of 2020, we were the voice of reason. People couldn't even look past the next week. So I think that's a good point.
Yeah.
Anything else you want to add?
No.
So Mark, my question for you is in regards to Q1 earnings season. So would you explain to viewers what earnings season means and what some of the highlights you saw from the Q1 earnings season of this year?
Yeah, so every quarter, at the end of each calendar quarter, publicly traded companies have to report how they did from a financial standpoint in that previous quarter. So companies that are just reporting right now are talking about how they did for Q1 in 2021, which is January, February, and March.
Correct.
Okay. So far in Q1, Matt, we've had record earnings beats, right? So you have all these financial analysts that predict or estimate what a company's earnings is going to be for that quarter.
Correct.
And a company either matches that estimate, they beat it, or they fall short of it, right?
Mm-hmm. Yep.
And we've seen a record number of companies beat analyst estimates, which to me is a very good sign. However, I don't think people need to get too granular with the quarterly earnings reports because, again, it is just for one calendar quarter.
Correct.
When we go to make these buys for clients, we're looking 12 to 18 months out. We're looking even 5, 6, 7 years out.
That's right.
So there is a lot of noise around earnings season.
Yep.
But so far it's been really good. Obviously recovering from the pandemic. We expect these earnings to continue to recover, especially for travel and leisure and what we call the sector of consumer discretionary, where people like to spend their money.
Yep.
So we can continue to probably see this growth and recovery and eventual expansion in GDP going forward.
That was great. You answered it perfectly. So join us back next week for another episode of Questions with Matt and Mark, and we will see you then.